Let's talk active versus passive money management. For the last decade, we've been in a bull market. Of course, recently that's changed with the COVID crisis and now economic recession we're in. And it's in these markets where you really see an opportunity for active management to work. Now let's define active versus passive management real quick. Passive management is pretty much owning an index like the S&P 500 or the Dow, where it's very diversified and you own everything. In bull markets, when there's really not one company outperforming another, think of it as a rising tide lifts all boats situation. Passive management tends to be the favored form or discipline of money management. And the argument is you don't need active anymore. We've seen that. We saw that in the late 90s. We saw that in the mid 2000s. But during these times, when you have so much uncertainty and you have recessionary-like environments where certain employers had more cash than others going into the environment, certain employers or companies had more debt than others going into the environment, it is an opportunity for active managers to really add their value. So we're excited about how we have developed and constructed portfolios here because we incorporate both. We have some passive management in certain asset classes, and we have some active management in other asset classes where we feel managers can do the most good. So there's no question that market volatility has returned. We warned of this a couple months ago when we said this thing probably won't end quickly. But the good news is the portfolios are holding up well. Doesn't mean they're not subjected to the downturns or the intra-week downturns that exist, where suddenly everything's good, then everything's bad. That is all very normal in recessionary-like environments. I think the biggest indicator is going to be employment and consumer expenditures. How does the consumer rebound from this environment? And that is where, again, active management can really, really make a difference. So we hope everybody has a good week. We look forward to speaking with you. Again, as always, if you have any questions, give us a call, 713-977-3800, or send us an email. Be happy to talk with you.